Imagine waking up to this headline. United States crosses $33 trillion in national debt. $33 trillion. The richest country in human history is also the largest debtor the world has ever seen. So here's the question no one really answers. Who actually owns that debt? Is it China? Is it the Federal Reserve? Is it you, without even realizing it? Because those $33 trillion are not just numbers on a screen. They are contracts, promises, and claims on America's future. On your future. Tonight, we're going to follow the money. From secretive central bank vaults to pension funds to foreign governments quietly stacking US IOUs. From Beijing to Wall Street to Washington, D.C., we'll see who holds the IOUs. And by the end, United States of America may mean something new to you. Because when you ask who owns the debt, you're really asking who owns the country. In 1980, US national debt was under $1 trillion. By 2000, it had jumped to about $5.7 trillion. After the 2008 financial crisis, we blasted past $10 trillion. COVID, lockdowns, and stimulus checks pushed us over $30 trillion in record time. Here's an analogy. Imagine a friend who owes money to everyone in town. He owes his parents, his co-workers, and a guy named Tony who doesn't do paperwork. Yet somehow, he's still the one lending money to everyone else. That's the United States, the biggest borrower and also the world's favorite lender. To see who owns America, we first need to see what they're buying. Those $33 trillion are not one big credit card bill. They're millions of IOUs. Think of the US Treasury as an IOU factory. Whenever the government spends more than it taxes, it issues new IOUs called Treasuries. They come in three main flavors: bills, notes, and bonds. Bills last less than a year. Notes last up to 10. Bonds can last 30. Each one says, lend us money now, we'll pay you interest, and pay you back later. The Treasury sells these IOUs at auction to banks, funds, and foreign governments. The interest rate is basically the price of trust. When trust is high, rates are low, and borrowing is cheap. When trust falls, rates rise, and debt gets a lot more dangerous. So who ends up with these IOUs? We can sort them into 4 buckets. Bucket 1. The US government itself through various trust funds. Bucket 2. The Federal Reserve, America's central bank. Bucket 3. Domestic investors like pension funds, banks, and individual savers. Bucket 4. Foreign investors, governments, central banks, and overseas funds. Let's start with the strangest sounding category. The government owing itself money. Roughly $7 trillion of US debt is intragovernmental holdings. That's mostly money owed to programs like Social Security and federal pensions. When you pay Social Security taxes, some of that money buys special treasuries. On paper, that raises the national debt. In reality, it's an internal promise. The government is promising that future taxpayers will honor benefits promised today. So this bucket doesn't own America in a normal sense. It's more like a ledger linking today's promises to tomorrow's taxes. Next, the Federal Reserve, which holds around $5 trillion in treasuries. The Fed buys treasuries by creating new dollars with a few keystrokes. During crises like 2008 and COVID, it bought massive amounts to stabilize markets. On the Fed's balance sheet, treasuries are assets. To the public, they're still debt. So a big chunk of US debt is owed to an institution that creates the money to repay it. That's extraordinary power, and a risk if politics ever bends the Fed too far. The largest bucket is domestic investors inside the United States. Pension funds, insurance companies, banks, and mutual funds all pile into treasuries. Why? Because in dollar terms, treasuries are treated as risk-free. They're the foundation of your retirement plan, your bank's safety net, your insurer's reserves. So a big slice of that 33 trillion is really America owing money to Americans. The IOUs sit quietly in accounts labelled your future. The final bucket, and the most political, is foreign owners. Governments, central banks and investors overseas hold roughly 7 to 8 trillion in treasuries. The biggest holders are Japan and China, each with under 1 trillion. Together, all foreign holders own about a quarter to a third of publicly held US debt. So, does China own America? No. China owns less than 3% of total US debt. Foreign countries buy treasuries because they're safe, liquid, and perfect for reserves. Exporters to America also use treasuries to park surplus dollars and manage their currencies. In a way, treasuries are the world's savings account, and the world needs them to work. To see who really owns America, we have to watch what happens in crises. First stop, 1971, when US debt stopped being anchored to gold. After World War II, foreign central banks could trade dollars for US gold. But by the late 1960s, America was spending heavily and its gold stock was shrinking. In August 1971, President Nixon went on TV and closed the gold window. From then on, US debt was backed not by metal but by trust. Trust in America's economy, its military, its laws, and its politics. Fast forward to 2008, when Wall Street imploded. Banks failed, markets crashed, and fear spread everywhere. You might think investors would run away from US assets. Instead, they ran toward US treasuries like a burning building's only exit. Stocks collapsed, but treasury prices soared as the world sought safety.
The Fed stepped in, buying massive amounts of treasuries with newly created dollars. The crisis exposed America's flaws, but it also proved the world had no real alternative. In 2011, the danger didn't come from markets at all. It came from Congress, fighting over whether to raise the debt ceiling. The US flirted with default, not because it couldn't pay, but because it couldn't agree. Standard & Poor's downgraded America's credit rating for the first time ever. Yet investors still treated treasuries as the safest asset on earth. Today, every debt ceiling fight repeats the same question. How long will the world keep betting that US politics won't break the system? Let's talk about consequences. Who actually gets paid on this mountain of debt? Every year, the US pays hundreds of billions in interest alone. Those checks go to pension funds, banks, wealthy investors, and foreign governments. The Fed also receives interest, then sends most of its profits back to the Treasury. On paper, it's just payments between institutions. In reality, future taxpayers are helping fund returns for those who own the most assets. The more treasuries you own, the more of that interest stream you capture. So part of who owns America is, who owns claims on its future taxes. But taxes aren't the only way governments manage huge debts. There's also a quieter, softer tool: inflation. When inflation is higher than the interest paid on bonds, debt melts in real terms. Your dollars buy less, but the government's debt burden shrinks relative to the economy. This mix of low interest rates and higher inflation is called financial repression. It quietly transfers wealth from savers to borrowers, especially big borrowers like governments. So while people fear foreign ownership, the real action is often in domestic policy choices. Choices about rates and inflation decide who truly wins and loses from America's debt. What about the nightmare scenario? Foreign countries dumping US debt? Could China or Japan crash America by selling their treasuries? They could cause problems, higher interest rates, market turmoil, and volatility. But they'd also hurt themselves, slashing the value of the bonds they still hold. Their currencies might spike, damaging exports to the very country they're targeting. And in a global panic, investors usually run right back into US treasuries. It's a strange balance of mutual dependence and mutual vulnerability, the deeper fragility may not be in Beijing or Tokyo at all. It might be in Washington, D.C., inside America's own politics. As debt grows, interest payments consume a bigger slice of the federal budget. That forces hard choices, higher taxes, lower spending, or even more borrowing. None of those are politically easy, especially in a polarized country. Investors buying 10-year or 30-year treasuries are really betting on US governance. They're betting that future Congresses won't torch the system for short-term points. If that bet starts to look bad, risk-free might stop being risk-free. So, who really owns America? On balance sheets, it's the Fed, domestic investors, foreign governments, and government trust funds. But underneath, they all own the same thing: claims on future American work, on the taxes you'll pay, the services you'll receive, and the dollars you'll hold. The real collateral is the productivity, stability, and trustworthiness of the American people. When the world buys US debt, it's buying that story continuing for decades. A story where America still functions, still pays, and still holds the center. Whether that story remains believable is the real $33 trillion question. If you had to lend your life savings for 30 years, would you buy this promise? Tell me in the comments, who do you think really owns America, and how long can this system last?